As the World Economic Forum focuses on global collaboration and growth for the year 2024, Nigeria's President Bola Tinubu used the opportunity to educate the audience on the importance of its economic policies. He will also touch on the Lagos-to-Calabar Coastal Highway project, what it means for Nigeria as businesses and livelihoods on the right-of-way continue to count their losses. Now, in Southern Africa, we will also examine the impact of speculators on Zimbabwe's Forex market. This is Business Edge. I am Lekon Onobanjo. Thank you so much for joining us. We start by looking at top business headlines from across the continent. The Nigerian Upstream Petroleum Regulatory Commission has launched the 2024 oil bid rounds, offering 12 oil blocks to potential investors. This was disclosed by Benga Kumalafe, the Commission's chief executive, at a recent Naiti House dialogue. The assets up for bid are primarily greenfield assets, and Kumalafe assured a fair and transparent bidding process. The Commission's revenue increased to 4.34 trillion naira in 2023, and it is anticipated that the country will earn billions from the assets in terms of royalties, taxes, and other levies. The Commission is also scrutinizing all awarded assets to identify underperforming ones, which will be revoked and subjected to a competitive bid process as per the Petroleum Industry Act. The Naiti Forum is designed to enhance government oversight and reforms in the extractive sector. Meanwhile, Nigeria's oil regulator has initiated the evaluation process for the divestment of Shell's onshore assets, which have a history of 75 years, to Renaissance Company, the new investors. In January, Shell announced its agreement to sell these assets in the Niger Delta region to Renaissance and shift its focus to deepwater and integrated gas investments. Renaissance Africa Energy Company Limited, a consortium of 5 companies, including 4 Nigerian-based exploration and production companies and an international energy group, is involved in the acquisition. The assets being evaluated hold an estimated combined value of 6.73 billion barrels of oil in volume and condensate, as well as 56.27 trillion cubic feet of associated and non-associated gas, according to Benga Kumalafe, the CEO of the Nigerian Upstream Petroleum Regulatory Commission. Finally, the naira has hit its lowest value since March 13, 2024 at 1,419.11 kobo to a dollar in the official foreign exchange market due to reduced foreign portfolio inflows. Data from FMDQ Securities Exchange revealed a 75.23% drop in net inflows from FPIs to $182 million in April 2024. The naira depreciated by 5.63% compared to Friday's closing rate, but it appreciated to 1,360 a dollar in the parallel market. The recent interest rate increases by the Central Bank of Nigeria and short-term exchange rate appreciation led to foreign portfolio investments making substantial returns and withdrawing their funds from the Nigerian economy. Experts caution about the volatility of FPIs and emphasize the need for sufficient fiscal support. That's African Business Stories. We'll go on a break to bring you market updates. On Market Watch, we look at Monday, where Nigeria's stock markets remained bearish with a decline of 0.19% as positive catalysts in the equity space were lacking. Market observers noted that the impact of high yields in the fixed income space was driving sell-offs on the bourse as investors shifted to less risky asset classes. Now, by the close of the trading session, the Nigeria Exchange Limited All-Share Index and equities market capitalization had decreased from the previous trading days of highs. We saw about 98,152.91 points and 55.51 trillion naira respectively to 97,962.25 points and 55.40 trillion naira. So we'll quickly take a look at the numbers, starting with the all-share index. And there we have it, closed at a 97.879 0.94 with a depreciation a value of 0.28%. We now look at the market capitalization for yesterday, of course, at 55.35 trillion naira, the closing, looking at the capitalization. And we'll switch now to the top price gainers for yesterday. Top in the chart there is Sterling NG, closing at 4 naira 20 kobo, followed by FBNH with 22 naira 35 kobo. On the floor takes the third spot with 3 naira 49 kobo. Tantalizer and Cavatin ending with 36 kobo there and 1 naira 59 kobo. Of course, we see the percentage difference, which is in a positive trajectory, but then it's quite slight because, of course, in the single digits of plus 9.95, plus 9.83, plus 9.40, 9.09, and 8.90%. Let's look at the top losers. We have NSL Tech top in the charts, closing at 54 kobo, and Dan Sugar, that is closing at 43 point. That's 43 naira 20 kobo. Car PLC closing at 26 naira. Berger closing at 13 naira rather 770 kobo, and Presco 209 naira. So we look at the percentage differential, which on the negative 10.00 all the way down to CAP that has 9.88. And of course, we have Berger at minus 9.87. Presco minus 9.72. So that is it. Before we go, we look at the sectoral performance now. The banking industry, of course, had a minus 0.41%, followed by insurance at 0.70%, the oil and gas a little bit, but then in the negative figures of minus 1.42%, and consumer goods at minus 0.79%, followed by industrial goods with just a paltry of 2% there. So that's how the market performed for yesterday. When we go on a break and we'll come back, we'll look at the World Economic Forum, what has been discussed, and the position of the Nigerian government in terms of its economic policies. Amid rising geopolitical tensions and a deepening north-south divide, the World Economic Forum brought together about 1,000 of global leaders and experts from government, business, international organizations, and even civil society organizations to chart a collective course towards a more stable, sustainable, and inclusive future. Now, the special meeting on global collaboration, growth, and energy for development 2024 was held under the patronage of His Royal Highness Prince Mohammed bin Salman bin Abdulaziz Al Saud, who is the Crown Prince and Prime Minister of the Kingdom of Saudi Arabia. On the side, Nigerian President Bola Tinubu, who was in attendance, met with a number of business leaders, including Bill Gates and delegates from Korea's Samsung and Denmark's Maersk. So to help us understand this better, I'm being joined by Olufemi Oladeyin, who is the senior partner, Argentile Capital Partners. Thank you so much, Oladeyin, for joining us on Business Edge.
Thank you. Thank you very much. Good morning.
Let's start this way. Now, the World Economic Forum 2024 focused on charting a collective course towards a more stable, sustainable, and inclusive future. So tell us, how can that be achieved?
Look, thank you. You know that in the last probably 2 or 3 decades, we've seen the world effectively move from a situation where countries were mostly looking inwards to a more globalized economy. We've seen the benefits of that, not just from economic growth. The world has actually seen the longest sustained periods of GDP growth on a global scale. We've also seen significant improvements in trade policies and trade alignments across different geopolitical zones. Now, of course, in the last few years, we've seen significant pressures from the geopolitical areas. You know, the wars in Russia, between Russia and Ukraine, the continued crisis in Israel and the Middle East, as well as China, flexing its models across the globe. Now, the World Economic Forum was a fantastic opportunity for the world to hopefully press a reset button and ensure that we have a clear trajectory towards ensuring that the growth that we have now is not just inclusive, especially for the countries that have suffered significantly, like most of the continents of Africa and
Hello, Oladeyin. I think we just lost communication with Oladen right there. That should be a technical glitch that we are hoping will be rectified in no time. But then he's been talking about the geopolitical tensions as regards the Middle East. Of course, there are also other issues that has to do with the West and Russia and the fights that we've seen between Israel and Hamas. And of course, other issues, pocket of issues all across the globe, which are actually threatening the global agenda, talking about what needs to be done in terms of collaboration, growth, energy, sustainability, and development, looking at 2024 and beyond. So a lot of people have asked the questions, if we continue to have these tensions continue to brew, how will those issues be resolved, and how can the world attain cohesion in terms of a global agenda that can drive development for the world? Now, I'll go back to Oladen. I want to believe that is right there. Oladen, if you can hear me, I'd like you to just conclude on what you were talking about in terms of what needs to be done to achieve growth, looking at the trajectory and the focus of the participants or the players within the global stage that actually attended the World Economic Forum. Oladen, can you hear me? Hello, Oladen.
Hello. Yes, sorry, I'm here now. Can you hear me?
Okay, fantastic. We can hear you now. So yes, I was saying that I would like you to just conclude on what you were trying to highlight, looking at the geopolitical tensions and the dynamics associated with it, and the kind of cohesion that needs to be achieved. Because if we're talking about global collaboration, we're talking about growth, we're talking about energy development and sustainability, and we still continue to have this pocket of issues across the globe, then it will be hard to achieve. So what needs to be done to do away with those challenges and be able to forge ahead in terms of what the world, looking at the world powers come together and what they're hoping to achieve?
So, I mean, fair point. The truth is that we've known from time immemorial that geopolitical pressures are always something that we have to deal with. It's even increasingly more obvious when you look at the fact that geopolitical has now become economic. So countries are starting to realize that economic power is also more important, sometimes even more important than geopolitical control. However, the reality is that the world only does well when we're in seasons of peace and stability. And I think that there's a lot of responsibility on political leadership to ensure that we continue to look towards a world that has a peaceful background, that has a peaceful intuition around it. And I think that there are specific countries that need to play that active role. So you're talking again about the US, some of the countries in the EU, Russia, China, India, and Nigeria, from Africa's perspective, and probably South Africa. And it's important that each of those political blocks, each of those economic blocks, see the pathway towards ensuring that for the world to reduce the level of poverty, hunger, and strife that we're seeing, political leadership is fundamental in providing that guarantee.
Yeah, so let's pick it from that angle where you talked about political leadership and what needs to be done if, of course, they were able to scale what they've been able to achieve, scale it to the global stage and have a bit of synergy, and that can actually foster growth for the world. So we look at Nigeria now because it's one of the countries you mentioned. We know that President Bola Tinubu attended the Special World Economic Forum and he highlighted his economic policies, the removal of fuel subsidy, the floating of the naira, and some other economic policies that are brought on bed that, of course, a lot of economists are saying that they are quite harsh, looking at the pre-existing economic situation that the country is faced with. So if you're going to do an assessment of his speech, what he said, what he has achieved, how would you describe it?
So interesting. If you went on social media, you would actually think that you were listening to these two different speeches by one person. But here is the issue. President Bola Tinubu continues to tout some of the policy decisions that were taken last year. But I think it's only fair that whilst he takes credit for those policy issues, he should also take credit for the implications of those policy issues. Removal of fuel subsidy, well, partial removal of fuel subsidy in reality, and the relaxation of the Forex market were positive, but they had a backlash. There was a concomitant implication towards those. And it's important that when he talks about that, that he also highlights those concomitant implications and then tell people what plans they have to be able to help economies like in Africa and Nigeria to recover from the implications of those reforms. Look, reforms are always going to be painful, but people must also see a clear pathway towards the benefits of those reforms. And I think in highlighting the importance of global support for a country like Nigeria, I think President Tinubu did the right thing in telling the world that, look, Nigeria is open for business, and it's important that the world continues to provide support to us as an economy. But look, at the end of the day, there are human beings who are the face of the economic policies that the government has created, and those people have to be taken into consideration.
Okay, so let's talk a bit about the $600 million investment in seaport infrastructure from Danish shipping company AP Moller-Maersk. Now, talk to us about the impact this would have on how important it is for Nigeria at this time, because I want to believe this particular group, I would put it, is one of the investors that are hoping to change the economic landscape of the country.
So, I mean, look, AP Moller have been very important in the Nigerian port industry for quite some time. In actual fact, they were one of the promoters of the proposed Badagry port. Now, that's clear. Interestingly, there is always, the jury is out. We all know that our ports have been extremely inefficient, and that has increased the cost of doing business for the average Nigerian corporate. So any investment that goes towards improving the efficiency of the ports would actually be beneficial, not just to the industries, but to the average Nigerian, because the benefits would immediately flow to the cost of doing business. And obviously, we hope that that would help us taper inflation on the downbeat. Now, the point here is this: for Nigerian economy to actually go through the leaps and bounds we're expecting, we need more than one AP Moller. And that's why policy consistency is extremely important. Governments want to see, and businesses want to see, that Nigeria has come to stay when it comes to policy, to policy consistency. That people want to be sure that what you say today is going to be consistent with what you say in 12 months' time. And that's where the major problem for the Nigerian government is. And I think if we are able to fix that, then we have an economy that we can be proud of in a short while.
But a lot of people have actually questioned the sincerity on the part of government in coming up with policies that are friendly, most especially with investors. We've seen a lot of international, global companies, of course, that actually existed in Nigeria, now leaving the shores of the country. So if we're talking about policies, and we have a president who's trying to woo more investors, but then we are seeing an economic ecosystem that is stifling the growth and the revenue drive of these companies to the point that they begin to leave the country. How do we now achieve the global, not even global now, how do we now achieve the grand scheme in terms of an economy that is buoyant, sustainable, and is friendly to accommodate these businesses?
So honestly, the easy answer to that always has to be the infrastructure base and the structural construction of the country. You know, the biggest problem we have is when companies come into Nigeria, they literally have to do things they wouldn't have to do in other countries. They have to provide their own power. They have to ensure that they sometimes even provide their own transport infrastructure, provide their own distribution infrastructure. In most other climates, some of these things are already in place. If I moved to the UK to start a business today, I don't have to move my goods on the road. I can put my goods on a train and they would get to wherever it is I want to send them to. So you see, the truth is that for us to have an economy that solves or that becomes the economy we're all looking forward to, there are certain infrastructural deficits and that have introduced structural issues into our economy that we need to fix. So one of those is power. One of those is our transport infrastructure. One of those is healthcare. So there are basic things that we need to fix. The quality of our education. What are our graduates capable of being hired by these industries? And if government does not look at that holistic solution, all we're going to be doing is exactly what I've always said: applying Band-Aid to a cancer. Applying Band-Aid to a cancer is not going to cure the cancer. For you to cure cancer, you have to graft it, you have to do chemotherapy, you have to do very strong things. And I think that's what we should be asking government to do. So don't apply Band-Aid to our problems. We know what our problems are. Give us a plan that clearly identifies solutions to those problems. When business sees that, business is going to invest. One of the things we must always remember is that investors don't make emotional decisions. Every investor is going to make a pure economic decision, and those economic decisions are based on the structure of the economy. And if Nigeria wants to attract them, then we need to make the economy more sustainable from a structural perspective.
Okay. Now, the president also spoke highly about the foreign exchange markets, saying that the reforms have removed artificial value and reduced corruption. However, the much desired stability seems to have eluded us. So what do you make of this statement?
Well, so I mean, the truth is that the naira is trying to find its level, given the fact that we've artificially propped it up for such a long time. Now that journey is going to be a difficult and choppy one. However, again, it comes back to one thing: policy consistency. If the policies are consistent, if the rhetoric and the messaging from the central bank are consistent and market driven, you will see an economy and a naira that eventually stabilizes around what the market thinks is its true level. But a currency that devalues 40% in 1 week has definitely not found its level. And that's because there is really nothing backing it. Now, I would say this: I think the central bank governor made a bit of a boo-boo in a speech about 2 weeks ago, in the sense that you have to understand that the market listens to everything you say. And nuance is also very important in driving market sentiment. We need positive sentiments around the naira at this point in time. And the rhetoric that comes out from government has to always be that our desire is to have a stronger currency, even though the journey to get there might be a choppy one. But once the market has it at the back of its mind, then it can make long-term policy decisions. So right now, we're going to continue to have a very volatile market, simply because people are trading on the naira on a spot basis. The moment we get to the point where people can start to look down the barrel and see a forward market for the naira, then you're going to see significantly more stability.
Okay, Ola Olufemi Oladeyin, Senior Partner, Argentile Capital Partners. Thank you so much for sharing your thoughts with
Always
us.
A pleasure.
On the show. Appreciate
Always
that.
A pleasure. Thank you.
We're now going on a short break, and we'll be looking at, as I told you earlier, the Lagos-Calabar Coastal Highway, because a lot of people who have businesses along the right-of-way are actually complaining, counting their losses, and wondering what will life be after this. We'll get into it in a bit. Of uncertainty hangs over a $200 million recreational site in Lagos State, one of which is the landmark beach resorts, a once thriving tourist destination facing partial demolition to make way for a massive coastal highway project embarked upon by the Nigerian government. Now, the multi-million-dollar resort, boasting of over 80 businesses and employing thousands, is caught in the crosshairs of progress. Now, the government argues that the Lagos-Calabar Coastal Highway, with its ambitious 5-lane dual carriageway and central railway, is crucial for regional economic development. However, critics point to the high cost, which includes both financial and social implication. Now, our guest, Mukhtar Mohammed, joins us on this particular program. Share Investment Limited, of course, is in charge, and he'll be helping us make sense of this. Mukhtar, thank you so much for joining us. Can you please unmute your device? We can't hear you yet.
I can hear you.
Okay, beautiful.
Well, maybe you can, my device is on mute.
Oh, okay. That's nice. Now, it's been an open secret about the back and forth that has gone on with the business ecosystem that will be sacrificed for the government's greatest scheme. But if we were to do a comparative and quantitative analysis of this, do you think that the Lagos-Calabar Coastal Highway would demonstrably improve trade and economic activities in Nigeria as against an already established business?
Well, Lagos, it depends on what we are looking at. First and foremost, most of the business that have been affected initially were not business that will have been affected with the initial plans. But now they are being affected, but you need to look at the larger picture. Again, most of these business are small-time SMEs business that are just doing their business on the right of way. And so they will also be able to benefit if the construction work starts on that same right of way. A lot of little business will crop up, and some of those people that are affected might also have opportunities to do business along those right of way. Because when we're talking about, I think the place that's really affected is the landmark beach, and it has to do with the beach itself. And some of the people that work in those beaches, setting up canopies, tents, shanties for people
Oh.
to relax during those. So those people will also be able to do one or two business with the
Okay.
construction companies.
Now, Mukhtar, I'd like you to just hold on your thoughts because we want to link it to others who have said that this will be beneficial looking at Nigeria now. But then we'll go on a short break, and when we come back, we'll take your thoughts on that. You're watching Business Edge, and at this point, we've been looking at the Coastal Highway, a 15 trillion naira project that is meant to go across Lagos to Calabar, covering 9 states. And we have a $200 million business investment that probably might go under just to give way for this particular project to come on board. And we have been talking to Mukhtar Mohammed, who is the CEO at Share Investment Limited. And Mukhtar, earlier on, you talked about the various business along that coastal line, especially in Nigeria, that will definitely be affected by these particular projects. But then we have a pro-government group that has come out to say that those affected are not up to 0.1% of the millions of Nigerians that will eventually enjoy this coastal road project when it is completed. So if we are going to do a juxtaposition of what is and what is not, those who benefit and those who will be losing on the side, do you think there's a parity? Do you think there's a balance? Do you think there's a justification?
Look, there's not those that are pro-government because they are not the one that have businesses there. Some people livelihood is depending on them. It's only in Nigeria that one life doesn't matter. In developed country, one life lost matter to everybody. So same with business. So I'm not saying I mean I'm in support of the Lagos-Calabar Coastal Way, but it's not enough to now say those people that are there because they are just 0.00% of Nigeria. We should just tell them to hell with them. No, a lot of resources have gone up into their businesses. Those businesses take care of homes, take care of families. So we should also be considerate in doing those things to them. And I think the government have said that they will compensate whichever business that is affected, and that compensation will start, I think, from May 3rd. They will be visiting and making payments. So for me, I think it's a good decision that has been made in respect of that. But for you to look at the business and say because it's just a national business, it doesn't matter because this one is going to be a state business or a global business. I don't think it's being I think it's just being not really being sympathetic to some of the people that their businesses are being affected in that space. So for me, I think it's a good thing. It's going to be a national project. It could also act as a way of tourism for people to want to come and see what we have been able to do. But again, these are business that will not even come in stream. These are projects that we are not sure when we'll see the end of it, whether it's going to end in the next 5 years, 6 years, 7 years, 8 years. Because when it comes to Nigeria, some project lifespan seems to be everlasting, like the second Niger bridge, if not of when Buhari came and he completed it. So let's hopefully watch and see that within the next 8 years, what the government said, we'll be able to achieve it. But there are a lot of macroeconomic headwinds that might not make it be possible.
Okay, so now I was actually there yesterday, and a few people that I spoke with felt that there is more to it than what we know, as the initial plan was to route the coastal highway along the Water Corporation Road, said to be on the right of way of government, instead of the beach resort, which could have been incorporated into the project. So now looking at probable solutions or what the government should have done, could there have been a more or less destructive and economically viable alternatives that the government could have considered so as not to have these businesses go down because of, a coastal highway that the government is trying to achieve?
You see, I think I said it in my first statement, saying that maybe the government expanded that project, and it's before it was supposed to be Lagos-Calabar Highway, but now you're looking at it as a coastal project. They wanted to pass through the Atlantic Oceans. That also give it more space to expand, which for me, I think is it still depends on the government what they want to do, and those people along that way, what they have seen, what the economic visibility study have told them to do. That's what they are doing. So, but I think also the government also will have to carry those people along, because a lot of people initially they got their licenses to build some of these projects that they are shouting, because the government of those states think there was no the road was not going to pass it. They gave them right to build such a gigantic project, and now you are coming to destroy it. You must have a soft landing for them. You must have a negotiation with them. But another caveat to the whole issue is that one thing we don't know in Nigeria is that government owns everything that has to do with the waterways. The waterways do not belong to the federal government, and that is where the minister is saying that we have the right of way on any coastal land in Nigeria is owned by the government. So maybe the government also look at the challenge they will have in passing through water corporation, because it's not very a coastal land. So they begin to look at what they have control over. So any coastal land is owned by the federal government. Even in the building of some of this infrastructure on the coastal highway, they had to get permission from the federal government through the then minister for the then President Goodluck Jonathan was the one that gave them the right to build the Eco Atlantic after many years where the federal government refused to give them those rights. So you need to know that when it comes to waterways are strictly owned by the federal government.
But then you probably might want to agree with me that what you own is not as important as what you own that benefits not only you, but people around you. Now, Mukhtar, we look at it.
The coastline project is not going to benefit just one people.
Yeah, we understand, but when you look at the costs of the business that will be going down, looking at the fact that a lot of millions of dollars have been expended towards pre-existing businesses along that, you discover that a lot of people will be losing.
I agree with you. When we look at it from that angle, yes, definitely. Like I said, no business is small. And with kind of business that also have attracted a lot of tourism, it's been a place of leisure for a lot of Lagosians.
Yeah.
Again, but the federal government will tell you, like the minister keeps saying, that I am not bringing down the structure. I'm only destroying the shanties. But what the minister have failed to say, what the minister have not told us, is that what really makes that place what it is today is not the structure there, is the sand, I mean the waterway.
Yes, it's the beach line.
Where they are now destroyed, because that's where people goes to relax. That's where they really make the money from. When they pay the ticket, people go there and sit down, stay in those shanties. It's not the buildings that have their structure on the landmass owned that they. And again, those buildings also have patronage from people that comes to the beach. They are the ones that patronize those businesses too. So those businesses also will be losing customers, because a lot of people come that by virtue of coming to the beach, they will now patronize those people. So I totally agree with you that a lot of lives will be affected, which is not good. But then when you look at the larger picture, it's worth it.
So let's look at the larger picture and scale it beyond, what it is right now. Now, both international and domestic investors are considering withdrawing their investments if this particular beach resort is demolished. But it's been argued that more investors will key into the coastal highway project, looking at the immense potential benefits. You've also talked about that. Do you think this would be a win-win situation for the government and the would-be investors that is being projected, or investors might be discouraged? Because when they bring in their money, they bring in their investments, they bring in, their infrastructure and everything to develop a particular part of a business ecosystem in the particular country, then we have government initiatives, government policies that is tearing down, their structures and depleting their resources, and they cannot even recoup on that investment. Don't you think they might just want to take a step back and say, please, I don't think I want to get into this?
Based on rule of law, we always strive in any economy. Economics strive on rule of law and intellectual property, not holding forth for the government. Nobody have come out to say, I have a CFO for the side of the beach that is being affected. What they are saying is the bigger structure that they put in there, that is the landmarks hotel, the landmarks building that are there, and the government have said we are not going to destroy an inch of those things. We are only going to make sure that every shanty along that our right of way is brought down, not the bigger structure itself. So we must look at it. It's only in Nigeria then we tend to be emotional with a lot of things, and then we tend to get away with it.
Well,
There was never a time Lagos State government have not said that they gave them the right to own the water, the shoreline, because if they
okay.
are moving through the shoreline of the waterways, I mean, they are going to fill those areas, create those road network from there. They've not destroyed a larger landmark structure that we see there.
Yeah.
They've not destroyed any major structure that is causing it. What they are looking at is the sand way, the waterway structure. So for me, yes, it could be another innovation for investors to begin to look at the coastal project and begin to look at it as a way of tourist attraction and begin to see
Okay.
how they can invest. It could also be a way that investors will not be satisfied and will get upset and then withdraw
Well,
their money.
well,
Whichever way, it has to depend on the investor
of
perception.
course, of course. I agree with you. Mukhtar Mohammed, CEO at Share Investment Limited, thank you so much for your time on the show.
My pleasure.
Let's now quickly go on a break to now come back and look at Zimbabwe's Forex markets. Now, Zimbabwe recently introduced a new currency called the Zimbabwe Gold to replace inflation-ravaged bond notes. However, residents in Harare say they are struggling to access foreign currency through banks, forcing them to turn to the black market. Now, this is causing frustration as many doing transactions every day, saying that, okay, they want to pay for their rent, they want to pay for fuel, they do not have access to Forex. Why? Because, of course, the US dollar is overpriced and it's not even available. Now, we dive into this conversation looking at what the people are saying and how they are being affected, looking at the Forex market and the challenges they're faced with. At this point, Dr. Prosper Chitambara, developmental economist, joins me to talk more about this. Dr. Chitambara, thank you so much for joining me.
Thank you so much for having me.
So I want to look at it this way. Now, the banks are not meeting Forex demands. Local money changers are coming into the gap to fill that space. And residents are patronizing the parallel Forex market just to have access to the US dollar. Now, we now have a government who is clamping down on these money changers. A whole lot of challenges as regards Forex in Zimbabwe. Isn't it wrong in the first place for the government to move against the Bureau de Change, knowing fully well that we have a scarcity in place?
Yeah, so according to the laws, obviously, it's not allowed to be involved in foreign exchange trading except you are actually licensed by the central bank. So this claim down by government is really to try to maybe stabilize the situation, although I'm not sure that it's going to be very effective. I think what it's going to do probably is just to drive these money changers further underground. We have a huge informal economy, one of the biggest informal economies actually on the African continent. So all those money changers are part and parcel of that huge informal economy.
So let's now look at what the ZIG, that is the Zimbabwe Gold, is meant to do. It has come into play, but then citizens are still complaining about Forex and the ZIG not actually living up to its performance. So why is it that we're not beginning to see a change in the legal tender, the economy, and the Forex market?
Yeah, no, my thinking is that change is going to take a bit of time to come. Because with this we've had these challenges for a long time, obviously. So a lot of people still have the trauma of losing value, losing incomes on account of the hyperinflation. So I think it's going to take a bit of time, and it's going to take the sustained implementation of a number of reforms to try to restore confidence. And once we're actually able to address the issue of high inflation, which is now estimated at about 57%, if we can get those numbers down to at least below 10%, I think that will be a critical benchmark and landmark in terms of the restoration of confidence in the ZIG. So I think what's needed right now is to ensure that we build the momentum in terms of implementing both fiscal and monetary reforms as a way of trying to bring down the high inflation numbers, and that should help in terms of restoration of confidence. The current inflation rate of 57%, I think that's too high. And obviously, it means many people will not have confidence in dealing or in transacting or even storing value in the ZiG because of the massive erosion of real incomes by the high inflation.
Okay, so earlier on you said that it's going to take a lot of time before we begin to see change, but a lot of people have actually questioned the sincerity of government in these regards because we see the government offering services and requesting for the US dollars to be paid, of course, by the citizens to acquire the services, but when they want to pay salaries to their workers, they pay in ZiG. So when we have a high demand coming from governments now for the US dollars, where is the change going to come from? For how long are we going to continue to have this disparity?
I think it's important that we have a clear roadmap in terms of our de-dollarization. But my own thinking is that it must be a market-determined process that is actually based on the attainment of key benchmarks, including the reduction in the inflation rate. Of course, government has already said that in terms of the payment of taxes by companies, 50% is going to be paid in the local currency. And my view is that I think that's an important step. But of course, with time, I think we should begin to see more and more government services, including even the fuel actually being sold in ZiG. But it must not be an abrupt process or a government decree process. I think it must be a market determined process that is actually based on the attainment of these important benchmarks or milestones, such as the reduction of inflation. So government must actually not decree de-dollarization, because if that happens, then I think that's going to erode even the little modicum of confidence within the economy. Of course, Zimbabwe, we've suffered fuel challenges in the past on account of distortions within the fuel sector pricing regime. So I think government is mindful of those potentialities. So I think that's why there's this understanding that we need a gradual approach, but that is actually based on a market process and not necessarily for government to decree that every service is now being sold, or every good and service is now being sold in ZiG. So that could actually further unravel the market or the economy.
Okay, Dr. Chitambara, let's end this way. Now, the government has been advised to make the availability of foreign currency flexible for everyone, or rather, make it possible to get a certain number of US dollars from the bank monthly in exchange for the ZiG. So, can this work?
Well, I think I'm not sure that it will work because the demand for foreign exchange I can't be met. The supply is not just is not enough to meet the rising demand for foreign exchange. And of course, part of that demand is also speculative, and part of it obviously is the need to store value. So I think it's going to be difficult to match the available supply of foreign exchange and the rising demand for that foreign exchange, which will actually mean that I think the black market will remain there, at least for the foreseeable future.
Okay. Dr. Prosper Chitambara, developmental economist, thank you so much for sharing your thoughts with us. And that's a wrap on today's edition of Business Edge. Do not forget that you can visit our social media handles at News Central TV, that is Central. And of course, visit our website, www.newscentral.africa. And you can look at our mobile apps on Play Store and App Store so that you can get more juicy details that we have on there. My name is Lekon Obanjo anyway. Until next time, enjoy your day.